The only thing guaranteed in this life is death and taxes. So if you own your own business, let's talk about ways in which you can reduce your tax burden. Now, if you haven't seen our video on the Augusta rule, the switching from accrual to cash-based accounting, hiring your kids, the advantages of all those three on reducing your tax burden, watch this video and then go out and then watch the previous 3 videos we have. These are the 4 big ways in which you can reduce your overall tax burden if your company is making less than $25 million. Different rules apply after that point, but take a look at all these videos, but stay here, watch on the SEP IRA. Now, there's different retirement programs that you can get involved in as a small business. I'm going to focus in on the SEP IRA. There's a couple of reasons why I actually find it advantageous, is that this in many terms is just like an IRA that you set up. There's a lot of different organizations that you can use. Personally, I really do like TD Ameritrade. It's actually one that I use for my own business and my employees. It's simple, it's easy, it sets it up, and your employees control their own investments. And one of the parts that I like about it, as a business, I'm not paying a fee for setting up a 401k and infrastructure like that. And I'm not paying per person to be able to include them into the program. Those are minimal costs, but for whatever reason, for me, if I'm paying $100, $50 per employee just for them to have access to a 401k program, I just rather do a SEP IRA. Now, there's going to be some disadvantages of a SEP IRA. We're going to get into that. But in general, what you need to understand is that a SEP IRA is an IRA that you can set up whether you're a single person company, LLC, or if you have different multiple employees. The benefits of a SEP IRA that I want to highlight for you guys right now is a couple different ones. One, you have a $61,000 contribution limit in 2022. This is great. Now, it's technically 25% of your income or $61,000 as a contribution limit, whichever is less. So think about that as when you are paying yourselves, you got to consider that. The second one is that you can combine a Roth IRA or a traditional IRA with a SEP IRA. So it gives you that flexibility and that capability that you would have with both of those. Third one is flexible contributions. What do I mean by that? Well, with 401ks, you have to do contributions on a regular individual schedule. With SEP IRA benefits, you need to get the benefits and contributions in before a certain time of the year, one time in the year, and that is okay. So it allows you to flex your contributions based upon the cash flow, which is going to be very helpful for a lot of small businesses because cash flow is one of the key kind of Achilles heels for all of us. The fourth part is, in this case, you get to control your own investments. Once again, going back to the TD Ameritrade, you can do an ETF, you can do individual stocks, right? You can get into bonds, but you control it, which means you're not paying management fees, even as the individual who is investing, unless once again you invest in an ETF or a mutual fund. The fifth one is saving on management fees. As a small business, once again, every dollar counts, and every dollar that I don't spend on a benefit that I want to give to my employees is one more dollar. Either A, I can keep as profit, B, I can reinvest into my company, or C, I can pay my employees. The sixth part, obviously, is reducing taxes. The beautiful part about that is, let's say you contribute $61,000 to your own IRA. Well, that's removed from your taxes, and you as an individual aren't paying taxes because of those benefits being received from you. However, just like everything else in life, there are some disadvantages. One of the big ones when it comes to disadvantages, you can't take out loans from your SEP IRA. 401ks, traditionally, you can take out loans. There's different rules regarding that, but you can take out loans. So this one has that disadvantage. Do you have that flexibility to take out loans? Are you going to need to take out loans? That's something for you to consider. The second one is, the SEP IRA allows it for you to put in a pretty big cap of dollars. But technically, if you did a 401k with profit sharing, you could actually put in more money. Could be nice. Third one is employees can't contribute. Now, why is this a problem for you? Well, it's not necessarily a problem for you as the business, but it is one of these things that you need to consider. A lot of employees are used to contributing money into a 401k and then having their gross income reduced by that amount for the net income. Lowers their tax bracket, lowers their taxable income. So sometimes employees want to be able to do that, and not being able to do that in this case, well, it's not necessarily a turnoff. It's just kind of a friction point, just a little bit of a hiccup. But once they understand that, well, hey, they're immediately vested into the money that's going into their SEP IRA, they usually end up liking it. Now, why is this a disadvantage? I actually wanted to put this as an advantage and disadvantage. But since I'm coming from the business standpoint, I'm going to make this a disadvantage. And the reason being, with 401ks and others, for company matches, you can have a vesting schedule, right? So 4 years, 100% of the funding is vested, now becomes employees if you only stay for a year. 25% of that money you get to leave with, and then the 75% comes back to the business. It is a retention tool. Now, one of the reasons why I don't like having a vesting schedule is I don't want people just waiting around and doing the bare minimum so that they vest and then leave. I don't think that's advantageous. Rather vest them immediately so that if they ever do want to leave, they can leave without having this kind of concern of when am I going to fully vest. Now, like I said, the SEP IRA isn't the only retirement plan you can consider. There's solo 401ks, 401k traditionals. 403bs are interesting. If you're a nonprofit, you have to go for a 403b. So if you're thinking about, I'm going to create, or I am a small nonprofit, consider a 403b. And then you have the simple IRA. So take a look at these as well to find out which one is best for you, best for your business. Now, as always, consult with your own tax advisors. Don't just listen to me and make a decision, right? Take this as a jumping off point. Do your own due diligence, do your own research. And really the reason why you have tax advisors is they are worth their weight in gold. They're going to keep you out of trouble. They're going to hopefully reduce your tax burden. And it's just a smart thing to do. Now, if you want to reach out to me, if you have any questions, I love the game. I love entrepreneurs. I love helping businesses. Feel free to reach out to me. You can either DM me over here, or you want to reach out and connect with me over LinkedIn, please do. As always, I wish you the best. Keep on hustling. Keep on grinding. See you later.